So, what if the price of silver you see on your screen every day is, well, just a complete illusion? Today, we're going to dig into the really wild argument from economist Lynette Zang. She claims silver isn't just a little undervalued, she thinks it's worth a whole lot more. Let's break down how she gets to that number.
Right. We all see that price for silver. It flashes across the news, it's on all the financial sites. But is that the real price? That's the question Lynette Zang is asking. She wants to know if that number actually reflects what silver is fundamentally worth, or if there's something else going on just below the surface.
And her answer? It's not 50 bucks an ounce, or 100, or even 500. According to Zhang, the absolute floor, the bare minimum for silver's real value is $1,300 an ounce. Now that is a shocking number, and it immediately begs the question, how on earth did she get there?
And just to be clear, that's a direct quote. She's not talking about some far-off potential price. She's establishing her baseline valuation. So the question for us is, how do you even begin to build a case for a number that seems so completely disconnected from today's market? Okay, so to even begin to wrap our heads around that $1,000 valuation, we have to start with her core critique of how silver is priced in the first place. Zhang argues that the market is basically a tale of two silvers. Her whole argument really starts here, by splitting the market into two separate worlds. On one side, you have the spot price. This is what she calls the paper game. It's a world of financial contracts, derivatives, and futures that, in theory, can be created almost endlessly out of thin air. But then you have the other side, physical silver. The actual metal. It's finite, you can hold it in your hand, and it's used in basically every sector of the economy. Zhang's entire premise is that this paper game is being used to artificially push down the price of the real, physical stuff. And she doesn't just say this without backing it up. She points to a few key things she sees as evidence. First, she says that markets are, in her words, admittedly manipulated. But she also brings up the time that a huge silver fund, the SLV ETF, actually had to change its own paperwork because, she claims, it just couldn't get its hands on enough physical silver to back its shares. For Zhang, these aren't just little market glitches. They're proof of a system that's designed to control the price. But look, this isn't just a story about silver in a vacuum. Zhang's incredible valuation is completely tied to her view of the entire global monetary system. She sees this massive economic storm brewing on the horizon, a storm that, in her mind, makes her prediction not just possible, but pretty much inevitable.
The way she paints the picture is pretty powerful. She uses this metaphor of the global economy as a car. You're driving down the road, but the engine is sputtering. It's losing power. It might still be moving for now, but she believes it's about to break down and get stranded on the side of the road. And to put some numbers on that sputtering engine, she points to data like this. Over $18 trillion in U.S. household debt alone. And with more and more people falling behind on student loans, credit cards, and car payments, she sees this as a huge red flag. It's a sign of an economy that's under a ton of stress and is super fragile to any new shock. Now, in this kind of environment, a lot of people are looking at new digital currencies as the future, as the solution. Zhang sees something completely different. She specifically argues that legalizing things like stablecoins isn't a step forward at all. She sees them as a tool, a new kind of currency designed to usher in hyperinflation because it makes it faster and cheaper than ever to just create new money and essentially burn away all that existing debt. Okay, so we've got a manipulated paper market on one side and a sputtering fiat economy that she believes is headed for hyperinflation on the other. So how does this all circle back to that $1,300 number for silver? Let's actually get into her math. So here's how she does it. It's really a two-step process. First, she says, you have to completely revalue gold to account for all the currency that's been printed. You have to find its true fundamental value. And by her math, that puts an ounce of gold somewhere between $33,000 and $40,000. Then, and this is the absolute key for silver, she applies the historical monetary ratio that has existed for centuries between gold and silver. In this historical ratio, this is the real linchpin of her whole argument. For centuries, when gold and silver were both treated as money, the ratio between them was about 20 to 1. So 20 ounces of silver got you 1 ounce of gold. But today, it's way up around 80 to 1. Zhang argues that this massive gap is purely a distortion caused by the paper markets. So when she takes her revalued gold price and applies that historical 20 to 1 ratio, That's how she lands on a minimum of $1,300 for an ounce of silver. So, if you're predicting this kind of dramatic monetary reset, what are you supposed to actually do about it? Well, that brings us to what Zhang calls her sound money strategy. And you'll see it's about a lot more than just buying up precious metals. It all comes down to this one phrase: if you don't hold it, you don't own it. This is her core philosophy right here. In her view, when you're facing a failing paper system, the only thing that counts as true ownership is physical possession. Stocks, bonds, ETFs, they're all just promises on a screen. Promises that she believes can and will be broken. And this hold it, own it idea extends way beyond just money. Her whole strategy is a mantra for a real-world resilience, built on securing tangible things you need to live: food, water, shelter, the whole list. But I want you to look at that last item: community. Zhang says over and over again that community is arguably the single most important part of preparing. That when times get tough, it's those local networks of neighbors helping each other that become the most valuable asset you can have. So in the end, Lynette Zang is presenting a vision where our entire financial system hits a really radical reset button. Now, whether you think silver is going to hit $1,300 or not, her analysis really forces us to ask a critical question. In this increasingly digital world, what is the nature of real wealth? And when the next big storm does come, what is it that will truly hold its value?